Welcome to this week's update on the hedged option portfolio. The price has continued to rally strongly, and I'm still holding the deep in the money calls, which are racking up losses. However, on the flip side of that, the strong rally has caused all of the puts I've been selling to expire worthless, generating a nice profit. At the end of last week's video, the equity was sitting at around 0.2815, after a drawdown of between 4 and 5%. But since then, the equity has recovered about 3%, now sitting at around 0.289. Due to the strength of the move, the implied volatility in the front end has remained elevated, meaning I'm collecting nice credits for every put I sell. We can see the term structure chart here on the metrics page, where the short-dated vol is actually higher than the rest of the curve. And what that means is, if we look at the short-dated expirations here, we can see at the money volatility is about 66, 67, and if we go out to longer dates like September, it's only 61. Although that itself is higher than it has been recently. This increase in the short-dated volatility, coupled with the call protection in June picking up some value, which we can see here, has resulted in the reasonably quick recovery in the Bitcoin equity. We can see that on the chart on the profit and loss analysis page. So let's take a look at the current portfolio. We can see that here. We're still short those calls that are very deep in the money. And those are currently set to expire next week, but I'll almost certainly end up rolling those. And we're short 2 puts that expire tomorrow, which have already made most of what they can there. ROI is about 88%. And on short options, obviously the maximum is 100. Maximum we can make is the premium collected. So these puts are almost worthless now, compared to where we sold them at least. And we've got a slightly negative delta, and the theta is too low at the moment. So what we need to do now is the same as usual, go into the 2-day options and sell some puts. So I'll do that now. Go on to the 23rd, looking at 30 to 35 delta. Actually, isn't one in that range, so I'll try and sell one either side. You can see as the price decreases slightly, this 95,000 put is actually the 30 delta, so I'll probably just up the size of this to 0.2. But I'll do that by adding another 0.1 because my order is probably at the front of the queue here. So no reason to replace that one with the one at the back of the queue. So I'll just add another 0.1. If we click on this arrow, you should be able to see both. There we go. There we go, we got filled on that. Now to reduce the risk slightly, in case we get a big pullback, I'm just going to buy back one of the options that's expiring tomorrow. Try and get filled around the mark. No takers there for the moment, so I will just up this to 14. And there we go. So this is the portfolio as it now stands. You can see I've added some positive delta, which has made it closer to delta neutral now. And the theta is looking a lot more healthy. So I'll be making money as time passes. And at the moment, I'm not particularly bothered which way it goes, at least for small moves. That's it for today's video. Just a quick update to the portfolio. Thanks for watching, and I'll see you next time.